I've been trading crypto since 2017, and I've been posting all of my trades publicly for the past 3 years. In this video, I'm going to be doing a full free trading course, okay? A through Z trading course to get you from unprofitable or wherever you are now to a consistently profitable trader. And to back up what I'm saying, I'll throw some results on the screen here. Okay, these were all of the plays called in advance inside of my pro Discord. We haven't missed a trade in like 2 weeks. So ask any of our members, we've been crushing it. So without further ado, I got my Mountain Valley water here. Also, shout out Mountain Valley water, really, really good. We're gonna jump into this, okay? Let us start, shall we? So I am a crypto trader. My strategy will work across any asset. So whether you trade Forex, whether you trade futures, I just prefer crypto. You get more trades doing this. There's more trade opportunities. And I find that crypto, maybe it's just because I've been trading it for 8 years now, but I just understand how it moves better because I've been trading this for so long. So I like crypto, okay? That's what I trade. That's what I've always traded. And to me, it didn't make sense to veer away from crypto if I'm already profitable trading crypto. Why would I throw in another market there? All I do is stick to crypto. This is what I know. This is what I'm good at. So I'm going to cater this video towards trading this, okay? So without further ado, let's jump into it. So the first thing we need to have, right? We're going to be talking about the indicators that we need to use. Ooh, indicators, scary, right? Now, you guys don't need any indicators to become a profitable trader. Yes, you don't need indicators to become profitable. However, I find that they help me a lot in my own personal trading. The indicators that I use are the indicators that I have developed personally for me, for the strategy, my own trading algorithm here, my own easy oscillator here in real time for the momentum, which helps me with finding an entry. But just for the sake, because the title says free, I'm not gonna be going over these indicators, okay? I've already made videos on them. So now that we understand we're trading crypto, we're not gonna be using a bunch of bullshit indicators. How do we start making money? How do we go from unprofitable to profitable? Well, the first thing you need is a trading exchange, which is why I'm partnered with the Blowfin exchange. There's gonna be a link in the description below. You guys can sign up to the Blowfin exchange, get a 10% cash back on the maker and taker fees. So anytime you enter a trade, 10% of the fees that would normally go to Blowfin will get kicked back into your futures account. So again, Blowfin is a recommended exchange for various reasons. They're non-KYC in the US. The first thing we need to understand before we enter a trade is what a key level is, a key horizontal levels. Now, a lot of people use a bunch of different trading methods. They'll use smart money concepts, they'll use ICT, but what historically has been proven to work over the past decades is trading key levels, key horizontal support and resistance, you can call them, levels or areas of interest on your chart where there is price history. Now, all price history is, and this is very important to understand as well, a level with price history is a level on the chart where price has reacted from multiple times in the past. There's a really good analogy I use for price history, and it goes like this. If you know a girl in your hometown who's hooked up with like 50 dudes that you know, right? Okay, she kind of gets around. And you have a date lined up with her and you're bringing her back home to the house. What do you think is going to happen? Okay, let's think logically here. Based on her previous actions, okay, based on what she's done in the past with the 50 other dudes, therefore, what can you expect when she comes over to your house, okay? You're probably gonna get some action. So we can use the same analogy for price, right? For price action. Let's say I'm looking at this chart here on a 6-hour time frame. I wanna see a general area or zone on my chart where price has reacted from multiple times in the past. So I can kind of see, this general zone right here has a lot of price history. So what do I mean by this? Well, you can see price bounces from this level once, twice, 3, 4, tests this level as resistance, 5, 6, 7, 8, reclaims this level, fails this level, tests it as resistance again. There's a lot of reactions at this level. So this is a key level, what I call a key level. Now keep in mind, support and resistance is not one level in specific. So for example, it's not this exact price, this line that I put. It's a general zone where price has reacted from multiple times in the past. And again, using our previous analogy, based on the prices past, what can we expect it to do in the future? Well, looking at this coin Popcat, if it were to come down to this level again, I would be expecting another reaction, okay? It makes sense, right? And the reasoning behind why you can expect another reaction is because this is a liquidity level, okay? This is already a tested and proven liquidity level. There are a lot of transactions between buyers and sellers at this general zone. So once again, if we come back down to the zone, we can expect a reaction to the upside because we're testing this as a bullish retest, which I will jump into in just a moment as well. Drawing your key levels is a first step to any trading strategy. So even if you're trading let's say ICT or SMC, where you're trading order blocks, whatever you may trade, whatever your style of trading is, right? You still want to use these key levels, okay? I refer to them as key levels. This will just increase the likelihood of the trade going your way. Okay, moving on from key levels. The next thing we need to understand is market structure. Market structure, in simple, is just, are we trending to the upside or are we trending to the downside? Now, there are a few other indicators you can use to help you with your daily bias and market structure, but you can just take a look at price and understand what we are. So looking at PopCat right now, we are in bullish market structure. And the reason I say that we're in bullish market structure is for a few reasons, okay? The first reason that we are in bullish market structure is because we reclaim this key level, okay? After we had reclaimed this key level with displacement, meaning a strong bullish move to the upside with multiple bullish candles, we are now in bullish market structure. We have a bullish bias until we lose our key level. Another reason I say we're in bullish market structure is that we've created a structure shift to the upside. Actually, right here would be the structure shift. So before this move right here, we were in a downtrend, okay? We're seeing lower lows, okay? And lower highs up until this point right here, where we have created a higher high, right? Closing above that previous swing point right here with displacement, meaning a strong bullish move to the upside. So anytime you see this move, okay, a move that looks like this, let me get my Eclipse tool out. This is referred to as displacement, in this case, bullish displacement. So this is just a valid breakout to the upside. It's a strong bullish move to the upside. When you have displacement, you will see multiple bullish candles, usually leaving behind fair value gaps, right? Fair value gap is a 3 candle pattern sequence with a gap in the middle. If you guys don't know what fair value gaps are, I'd recommend watching another video on fair value gaps if you don't know what they are. But in simple, all a displacement move is a strong move to the upside. And because we're breaking structure and we had reclaimed that key level, we have a bullish bias. We also probably have bullish EMAs or a bullish trend cloud. And we have a bullish trend cloud here on the easy algo indicator. Again, this is just another added confluence that I use, where you can see the trend cloud is bearish, right? Bearish, bearish. And now we see the trend cloud flipped blue, meaning we are bullish, right? We can see it flipped blue, meaning longs are valid. At the end of this video, I'll be showing you guys how you can get access to these two indicators as well. So now we understand key levels and we understand market structure. Now that's a very basic explanation of market structure. I'll draw it out one more time just so you can see. So, lower lows and lower highs is a downtrend until you make a higher high and a higher low. This would be your structure shift to the upside. And now you are looking for long positions on the retrace to continue the trend to the upside. Okay, people overcomplicate the shit out of market structure. That's all it is. Number 3, I kind of already touched up on this, is displacement. We want to see these strong bullish and bearish moves to the upside and then look to take a position on a retrace. So for example, this is an example of a displacement move to the upside. This is not an example of a displacement move to the upside. You can see the difference between these two moves, right? This move right here and this move right here. This is a straight up, displacing, creating bullish fair value gaps, right? Gapping to the upside, breaking market structure. This move right here, it's not really doing that, right? We kind of consolidate, we go up a little bit, we immediately reject. This is not an example of a displacement move to the upside. Okay, next what we need to understand, and this is very important, arguably the most important, is the golden pocket fib, right? You need to know how to draw a fib, okay? So to draw a fib, by the way, this is a built-in trading view tool. Go to the left side here, go to fib retracement, and you want to draw it for a long from the swing low to the swing high, okay? The fib levels that I use, if you jump into settings here, are the golden pocket fib. Okay, the 0.618 and the 0.65 fib retracement levels. These are referred to as the golden pocket, the optimal trade entry, whatever you want to call it. What you're doing by drawing your fib from the swing low to the swing high is you are literally forcing yourself to enter in discount. What's the number one rule of trading, right? You want to buy low, sell high. So how do you force yourself to buy low? Well, you use the fib retracement tool and you look for reactions at the golden pocket and below. That's one of my trading rules as well. Now, for the most confident trade setup here, you want to see overlap with your key level and your golden pocket fib. In this case, we're not seeing that direct overlap with the golden pocket fib, overlapping that key level. But because this move to the upside is so strong and we have this key level here, I'm still going to look for longs at this level. Now, if we drop down to a lower time frame, we can use a different swing point like this right here, which is actually the most recent swing point on the 1 hour time frame, right? From the swing low to the swing high. And we do, in fact, have that golden pocket fib overlapping our key level. We also have a bullish fair value gap here, right? A bullish imbalance, right? Some lows here as well to take out. So a lot of confluence at this level that we can be looking for a long position if price were to come down here and we get bullish divergences on a lower time frame. which is the final part of the strategy, which is looking for those bullish divergences. So once you have that key level, once you understand that market structure is bullish, once you have a golden pocket fib overlapping that level after a displacement move to the upside, what you want to do on TradingView, guys, is draw out what you want to see on your chart. So I will use this long position projection tool here, and I will actually draw out on my chart what I want to see price do. Okay, so I want to see price come down to this level, and if we get our bullish confirmations, I'll enter the long position. So I can even type this out, right? If we get bull divs on 15-minute down to 5-minute time frame, I will enter long, okay? So I actually type out, in advance what I want to see so I don't get emotional. And this is the biggest part of trading, right? Is dealing with your emotions. But that's just going to come with time. That's going to come with time in the markets. You're going to win some trades, you're going to lose some trades, but you want to get in the habit of having a plan in advance and sticking to that plan, okay? And the easiest way to stick to that plan is to literally write it out on TradingView, exactly what you want to see. And then you have your take profit targets, right? So my first take profit would probably be the local highs right here, okay? My second take profit would probably be up here, okay? So this would be my trade idea on PopCap. Now, some added confluences you can use are the fixed range volume profile, another built-in TradingView tool. If I jump into the settings here, I use the 70% value area volume. Again, this is a little bit more advanced. For those of you guys that are brand new to trading, I wouldn't really worry about that. I also like to use these easy algo signals here to help me enter the trade, right? So let me just turn on my easy algo confirmation signals. Okay, so we have these little blue and gray X's and these blue and gray arrows. Okay, this actually helps me get in the trade. So for example, if I'm looking for a long position at this level, I will drop down to a lower time frame, look for some of these confirmations on the easy algo indicators, and then enter the trade. But again, you don't need indicators for this strategy. As long as you understand price action, you can trade. Now, I did mention at the beginning of this video that I use the easy oscillator. This is the only indicator that I would say, not necessarily that you need, but that I personally use no matter what, okay? Because sometimes I won't use the easy algo indicator, but all the time, every single trade I take, I make sure I'm looking at the easy oscillator. This is the most powerful indicator, in my opinion, okay, on TradingView, and it's one that I have coded specifically for this strategy. So what you're seeing here on the easy oscillator are these overbought, okay, overbought at the top, and oversold zones with this blue to gray wave trend with these little blue and gray dots and these bullish and bearish divergences, which, by the way, all of these confirmations that you are seeing on your chart right now are in real time, okay? This is a non-lag, non-repaint indicator. So how I use this is when price comes down to my level, I want to see a few things, okay? The first thing I want to see is that on a slightly higher time frame, okay, on a 4-hour time frame, I want to see the oscillator approaching that oversold zone as it's coming down to my key level, okay, on a higher time frame. This tells me that price is oversold. I do not want to be taking longs, okay, when the oscillator is overbought, okay? This is when you should be looking for short positions, okay? I want to make sure price is approaching that oversold just as it was at this bottom right here. You can see oversold, and just as it was on this bottom, okay? On this bottom right here, okay? Oversold, and then we get that final confirmation buy signal on the algo, right? Boom, and then price goes up. So that's the first thing I look for. But mainly what I use this for is for entering a trade on a 15 to 5-minute time frame, right? Like I've typed out here. Actually, we can go down like a 1 hour in this case because this is a slightly higher time frame setup. Okay, so what I'm looking for here as price comes down to this level is bullish divergences. So I want to see as price is making lower lows into this level. Okay, let me see. As price is making lower lows into this level, I want to see the momentum. Okay, I want to see the momentum oscillator making higher lows like this. So as price is making a lower low into our key level, momentum is seeing a higher low. This discrepancy between price and momentum is referred to as a bullish divergence. And our indicator will signify those bullish and bearish shifts in momentum with these real-time bullish and bearish divergences that you see here, okay? And that is going to be my final entry confirmation. Once I see those bullish divergences, in this case, because we're looking for a long position, I will enter the trade. You can also set alerts for when price comes to these levels, so you don't have to be looking at your charts all day, right? So I can just do a horizontal line, Alt-H, right? As price is coming down to this key level, go to alert right here, and I can set an alert to my phone for whatever pair that I'm looking at. I'd also recommend, if you're a beginner, only stick to a few pairs to start, okay? Stick to Bitcoin. right? Stick to Bitcoin, maybe a few other altcoins as well. Get the strategy down, understand how these coins move, understand how to identify market structure, and then you can start building out your watch list, looking at more and more coins. Now, if you guys want my personal help with your trading, follow my exact trades every single day, as well as some other pro traders that I work with, and get access to the indicators on your screen here. There's going to be a link in the description below. Okay, the first link in the description below to join my pro trading community. We're rated 4.6 stars out of 5 with over 100 plus reviews. We're not just some community that gives you access to the indicators and then tells you to go fuck off. Okay, we actually work with you. We actually help you on a day-to-day basis by providing signals, analysis, daily live streams to make you become profitable. As long as you can dedicate 5 to 10 minutes per day to learning the skill of trading, following my analysis, tuning into the live streams at times, you guys will do really, really well. We also have some more tutorials inside of the Discord on how to use these indicators. Again, you don't need indicators to become profitable, but it does help remove the guesswork. So again, that's gonna be the first link in the description below. If you found value from this video, make sure to leave a thumbs up on this video, subscribe to the channel for more trading content, and I'll see you guys next video.